Welcome back. Well, let's run you through the remainder of the headlines. The shares of Adani Group, they came under pressure after US investment research firm Hindenburg Research revealed short positions and flagged up multiple risks. Adani Group, well, they hit back, accusing Hindenburg of malafide intent. The short seller, Hindenburg, said it holds short position in Adani Group companies through US traded bonds and non-Indian traded derivative instruments. The report said that the 7 listed companies of Adani Group have an 85% downside on a fundamental basis due to sky-high valuations. Hindenburg also claimed that the Adani Group companies have taken on substantial debt, including pledging of shares of the inflated stock price for loans, putting the entire group in a precarious financial footing. Adani Group responded to the allegation saying, and I quote, "The report is a malicious combination of selective information and stale, baseless, and discredited allegations that have been tested and rejected by India's highest court." End of quote. Adani also questioned the timing of the report ahead of the upcoming Adani Enterprises follow-on public offer.
The timing of the report's publication clearly betrays a brazen, malafide intention to undermine Adani Group's reputation with the principal objective of damaging the upcoming follow-on public offering from Adani Enterprise, the biggest FPO by a private sector company in India.
Well, moving on to a CNBC TV18 exclusive then. Star Health plans to diversify into life insurance business. The insurer will apply for a composite license once the government clears the proposal and amends the insurance laws accordingly. Yash Jain is standing by to fill us in with all of those details. Yash.
Well, that's correct, Nigel. So, of course, so far CNBC TV18 has reported about how LIC as well as HDFC Life both want to enter the health insurance market. But this is different and more important since it's a health insurance company which wants to enter the life insurance space. What we've been given to understand from our sources is that Star Health Insurance is preparing itself to enter the life insurance market. The focus mostly is going to be on protection or term insurance products. The thinking is that these protection or term insurance products will be a perfect fit to the current product offering from Star Health Insurance, which is health insurance products. If you have a term insurance products also complementing the current product portfolio. Of course, all of this depends on whether or not the parliament session, the budget session, approves the amendments to the Insurance Act, whereby one of the amendment is also a composite insurance license through which a cross business will be allowed for general insurance and life insurance companies. If that happens, right after that, according to our sources, Star Health is likely to apply with the insurance regulator and for the regulator to consider Star Health's proposal of entering the life insurance market.
Interesting one. Yash, thanks so much for joining in and filling us in with all those details. Moving on to the fifth headline today. Production concerns help metal prices higher. However, strengthening dollar index kept prices in check. Metal stocks, though, they ended with marginal gains, though the rest of the market was lower. Manisha Gupta is standing by to fill us in with more details on that space. Manisha?
Well, off its highs, but still trading on the higher side of the range is what the metal prices have been doing today. The dollar index has jumped back above 102, and that clearly was keeping the prices in check. But even with that, we have seen copper, aluminum, zinc prices trade at near 7-month highs. There is surge in the prices because of production concerns. There are a lot of labor negotiations as well coming into the next quarter. And then there have been mine disruptions, maintenances that a lot of smelters were put on. And the China reopening clearly has been a big factor that continues to play its role into the markets even now. The markets also are watching out at the power rationing which has continued in China and Europe, keeping a lot of smelters trading or working below their overall capacity. That will continue to support prices. Markets do believe that as and when there is demand that comes back into the market will be sharper than what the supply can catch up with. So when you look at the inventories as well, we started 2023 with a lot of depleted inventories here. We saw nickel inventories decline by 46% in the previous year. Aluminum declined 52% in its stockpiles. Lead inventories were down 54%, and zinc inventories fell by 85% in 2022. And many of these metals have started 2023 with a deficit there. So when you look at the prices already in Jan 2023, you have the copper prices up by nearly 12%, zinc is up by 14%, aluminum prices up by 10% as well, and tin continues to be an outperformer with 23% of gains in the month of Jan alone.
Thanks for that, Manisha. Well, on that note, we'll wrap up on this edition of Markets Today. Thanks so much for watching. Stay tuned to CNBC TV 18 for more news and updates.